No sound. Hello and welcome back to Crypto Saving Expert. The sound should now be on. Thank you very much for tuning in as always. This is the Crypto Saving Expert news show where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So make sure if you are new here to like, subscribe, hit that bell notification button. So what we are seeing today is Ethereum has outperformed Bitcoin in the last week. So Ethereum is up 4% in the last week and Bitcoin is only up 1.3%, with Bitcoin trading at $30,600 and Ethereum trading at $1,950. So at the end of today's stream, we will be analysing the price of Bitcoin and Ethereum and we'll compare the two as well. It's going to be an interesting week this week, I think. There's been a lot of news coming out over the weekend. So we have a lot of interesting things to discuss today. So let's see what's going on here. In the chat, Jason Smith says, big congratulations to CSE for reaching 9,000 subscribers. Thank you very much. Yes, Crypto Saving Expert has had 9,000 people not only go onto the website, but press that big blue button at the top and sign up to the website as well so they get access to the full website completely for free. Now, if you have not done so, we recommend you do so. You get all those free cryptocurrency courses if you do that, and we are on a mission to grow as big as possible and help adoption of the cryptocurrency space. Let's see what's going on in the cryptocurrency news today, though. Let's catch up with what's been happening. It has been a very turbulent weekend, so let's discuss that quickly. Let's take a look at what's going on here. So let's first discuss the news around Gary Gensler. So first of all, the SEC's had to step in and end these rumors because it has got pretty extreme. So there's been tweets about an article which said that Gary Gensler had the SEC had reportedly disclosed that Gary Gensler, let's get onto this tweet. So this is a tweet from Whale Chart. Anonymous official at the SEC has disclosed that Chairman Gary Gensler is going to resign following an internal investigation. So this spread across the whole of cryptocurrency Twitter like wildfire. Everybody was in disbelief, really, that Gary Gensler was having to step down. Because maybe there was some biased opinions involved in his recent decisions with the cryptocurrency industry. But since then, we have noticed that that article that really publicized this and brought this to light was AI generated, as Cointelegraph have pointed out, 96.81% AI GPT generated. And it's seen since then that that is not true. So somebody's just generated an article through AI, published it, and cryptocurrency Twitter have taken that as real and ran with it, really. So what we can see here is the US SEC ends rumors confirming Gary Gensler is not resigning. Now, you can see here on this tweet, there's a bit of disbelief here. That, as expected, the SEC government PR says Gary Gensler is not resigning. It's a bit of disbelief that the cryptocurrency industry have ran with this so much that the SEC have actually had to step in and deny these rumors. You can see here, this is a nice tweet there, dislike, very much so. I would love those rumors to be true. We can talk about why in this next article here. So we have here, Gary Gensler must remove himself from all SEC decisions on crypto. Now, before we continue with today's stream, please don't forget to like, subscribe, and hit that bell notification button. We do these live streams every single weekday, so make sure that you are checking in to see what's going on in the latest cryptocurrency news. It's one of the best ways to stay up to date with the markets, and it's a very easy way to stay up to date with the markets as well. Bruce says, such a shame he hasn't resigned. I absolutely agree. I mean, the cryptocurrency space would be much better off if Gary Gensler wasn't the SEC, in my opinion. But we can discuss this in this article here. So Blockchain Association have said how much Gary Gensler is affecting the SEC, and if he was removed, the SEC's decisions on crypto could be much better. So let's take a look at this. The organisation claims he has refused to follow due process and has contradicted the SEC's past actions. So the recent enforcement actions on the crypto industry by the SEC, which include filing lawsuits against Binance US, against Coinbase, and calling many different cryptocurrency projects securities like Solana, like Matic. We can see here that Congress have created the SEC to be a fair and issue guidance. So in the paper, the Blockchain Association pointed out that the SEC was created by Congress through the Securities Exchange Act in 1934 with a mission to protect investors, facilitate capital formation, and maintain fairly, orderly and efficient markets, and to promulgate use rules and issue guidance pursuant to authority granted by Congress. So this was intended to be a good thing for the industry. It was intended to just regulate things in the correct manner. But what we're seeing here is something that a lot of people are agreeing with, myself included. However, the SEC has failed to follow known fair processes in their recent enforcement actions against crypto firms and digital assets, according to Blockchain Association here. So we can see that they have said, in the digital asset space, the SEC has all but abandoned its role as a rulemaking body. Despite continued requests from the industry for regulatory clarity, the SEC has refused to adopt any rules or issue any guidance on the issue, among many others, for over 4 years. Instead, the SEC has chosen to regulate digital assets solely through enforcement actions. And that's what we've been seeing and discussing in the last couple of weeks. So we've been seeing the cryptocurrency industry fighting out for clarity on that regulation. Specifically on determining whether an asset is a security or a commodity. We use the Howey test that was created in 1946, and people have been crying out to have some clarity on this because the Howey test to determine the categorization of digital assets just isn't clear. You can't use the Howey test for digital assets, it just doesn't work. So we want some new frameworks so that we can understand and regulate the industry in the correct way. But instead of them providing that framework, they're regulating by enforcement. They're just filing lawsuits against different cryptocurrency companies, and we have to kind of put the jigsaw together and work out what reasoning they have for each of these lawsuits so we can understand what to not replicate and what to try and grow forwards with. So we were looking, for example, at the different cryptocurrency assets that were listed as securities in the filings against Binance and Coinbase, trying to draw some connections between those assets so we can understand how the SEC are determining their securities. That's the route we're having to go down right now, because the SEC are not able to create their own framework and produce that and share it with the public and be more transparent about their regulation. So it's very difficult for cryptocurrency companies to thrive in that environment, and that's why we've seen a lot of different cryptocurrency exchanges and cryptocurrency companies moving their focus from the US there. So we can see here, obviously, Chairman Gary Gensler has taken a biased path of regulation by enforcement when dealing with crypto firms and digital assets rather than using the law and following known processes. So we can see here, Blockchain Association team have said, Chair Gary Gensler repeated assertions that all digital assets other than Bitcoin are securities create the unmistakable impression that he has in some measure already decided the central issue in digital asset related enforcement actions. Thus, to comport with due process and avoid tainting the SEC's enforcement proceedings, Chair Gensler must recuse himself from any decisions about the initiation or continuation of an enforcement action that depends on whether a digital asset is a security. Now, to continue on with this story, we have seen some draft bills being created this year that would actually remove Gary Gensler as chairman of the SEC and instead have a board of people at the top who can vote on decisions. And one of the rules within that draft bill was that any previous chairman of the SEC could not be within that board. So that would completely eliminate Gary Gensler from having any real say over the final decisions in the SEC, and it wouldn't leave the whole industry determined by one person. I mean, Gary Gensler, the chairman of the SEC, it seems to be making all of these rash decisions that don't really make sense, don't really add up, and contradict other things that have been going on, and contradict the things that have happened in the past from the SEC and statements made in the past by the SEC. So if we have a board of people at the top there, it will be a lot fairer, in my opinion, here. Let's see what else is going on. Bruce says, such a shame he hasn't resigned. Completely agree there. I think this draft bill that was created at the start of this year is something that could really improve the SEC. Whether that will be pushed and continue forward with, I am not sure, but we will have to wait and see on that. If it does, we will be very happy, and we will be reporting on it here on the Crypto Saving Expert News Show. So if you are new here, please don't forget to like, subscribe, hit that bell notification button, and make sure to tune in every single weekday where we talk about the latest cryptocurrency news around 11 to 12 a.m. BST time. As I always say, this is one of the best ways to get into cryptocurrency. When I first got into crypto, I really felt so out of my depth. I didn't know where to research first. And I think one of the most important things to do is just to stay up with what's going on in the markets, because you'll learn how the prices of the assets react to the news. So by just tuning into these live streams every single day, just put me on in the background and listen in when you can. I'm sure you'll pick up on the industry a lot faster than those who don't. So make sure to subscribe if you haven't already. Let's see what else is going on in the cryptocurrency news though. we need to talk about Kraken. Now, last week, we saw KuCoin have mandatory KYC for all users. We've seen Bybit have the same approach on the 8th of May. And now we are seeing Kraken to provide the IRS with users' information. So this is what a lot of people in cryptocurrency are against. We use blockchain technology, which has transparency, decentralization, and has a sense of anonymity. I always say that wrong. So what we have here is a lot of cryptocurrency exchanges that many of us use as fiat on and off ramps are requiring KYC. So they're requiring you to give personal data, give your address, give your date of birth, give all of your information and prove that you are who you say you are. Now, a lot of cryptocurrency people are against this. One of the main reasons we are against this is because we are being treated as the cryptocurrency sector like the traditional financial system in the sense that you have to KYC, you have to AML. Now, we are being treated like the financial sector in that sense. However, we are not being treated like the financial sector in other senses. For example, we don't have clarity on regulation. The other thing we don't have is we don't know if the cryptocurrency companies that are requiring KYC and AML information actually have the infrastructure behind closed doors to store that information safely. So in traditional financial systems, yes, they require users to KYC, but they have been there for years and years and years, and they've built the infrastructure to keep their users' information safe. In the cryptocurrency space, all of these new businesses are rising and requiring all of this personal data, and we don't know how they are storing them correctly because they're not fully regulated businesses in the same way. Even though the front end may look nice and polished and look like the traditional financial system, like the regulators are trying to treat them like one, we don't know what's going on behind closed doors. That causes a lot of people to shy away from the idea of giving away their personal data, and that is why a lot of people move from one cryptocurrency exchange to another. What we can see here is Kraken is now being forced by the courts to provide the IRS with its users' information. So let's take a look at this article a little bit more. So they are suspected of underreporting their taxes there. So crypto exchange Kraken has been ordered by the judge of the U.S. District Court for the Northern District of California to comply with a request by the IRS to provide information about its users suspected of underreporting their tax liabilities. So let's take a look at this one. Before we do, please don't forget to like, subscribe, hit that bell notification button, help us with the channel. We currently have 10 likes on today's stream. We've got 26 current viewers on YouTube, and we've got many more over on Twitter. So if you haven't already, give us a like, give us a subscribe. If you're following along on Twitter, make sure to come over to YouTube and give us a follow. We're trying to get to 100,000 subscribers by the end of the year over on the YouTube channel, and we really need your help to do so. Let's see what's going on here. So according to court documents on the 30th of March 2021, the IRS filed a petition to serve an administrative summons upon Kraken to obtain information on accounts with annual transactions totaling at least $20,000. The tax agency particularly requested reports of Kraken users between the 1st of Jan 16 and the 31st of December 2020. The IRS sought to obtain users' information such as names, date of birth, address, phone numbers, and other personal data. However, Kraken refused to comply with the initial summons, stating the tax agency's requests were overboard as they went far beyond the basic user information. According to Kraken, the IRS also wanted information on its users' pseudonyms, historical personal information changes, IP addresses, blockchain addresses, transaction hash, and user payment methods. Now, that is a lot of information. That means they can follow the transactions from the cryptocurrency exchange and see where these users are storing their funds in the long term and how they are interacting with cryptocurrencies long term. So, such information at this point would serve only to provide unfettered access to the private financial and personal information of thousands of otherwise law-abiding users that the IRS has no interest in auditing. So IRS granted in part and denied in part according to Kraken users' information. So the judge has granted and partially denied the IRS's petition for Kraken users' information. So the extent of the first three requests are aimed at establishing the identities of the Kraken account holders. That's the name, date of birth, and the addresses. But the other information sought in these requests is much broader than what is necessary to achieve the purpose of the vast majority of those users. So they have declined all of those excess information details that the IRS were trying to get access to there. And I agree with that. I think that is very, very overboard there. But just keep a close eye on this. I expect that this could happen with other cryptocurrency exchanges as well, providing that KYC data isn't something that the exchanges are just going to store behind closed doors and never really need. I'm sure that it'll be used at some point. So let's continue on with today's cryptocurrency news and see what else is going on here. Before we do, please don't forget to like, subscribe, hit the bell notification button, and let me have a sip of my coffee because my throat is feeling incredibly dry today. Let's talk about ChatGPT. Now, this is a really interesting one. Let me know how many of you guys have tried out ChatGPT. And it's a very interesting tool. I mean, AI has progressed so much, like to its end for its end users, for you and I. Within the last 6 months, it seems like it's come out of nowhere, and it is incredible what this can do. It's slightly frightening, but let's talk about this in a little bit more detail. ChatGPT creator, OpenAI CEO, was actually on a podcast a couple of days ago or last week or the week before, discussing regulation of AI as well, because AI is having similar issues to cryptocurrency in terms of regulation, that it needs regulation to grow, but it needs some sort of regulation there to stop bad actors in the space. So let's see what's going on here. Bruce says, put all your spare money into crypto. You will be grateful in 12 to 18 months that you did. Not financial advice there from Bruce in the chat. Let's see what's going on in today's article here. How ChatGPT can help traders identify potential rug pulls. So this AI software from ChatGPT plugin store that can spot honeypots and other potential scam contracts. Now, there's basic things in smart contracts that can be used to scam users. I mean, some contracts can have some, let's see, for example, here. The AI plugin was able to distinguish the contract from scam contracts, designating it not a honeypot despite USDT having several control features, including ownable, pausable, blacklist, and upgradable. So the demonstration showed that AI software could be used by savvy investors to safely navigate the high-risk, high-reward crypto asset space. So that would be really, really useful there, just allowing people that don't understand Solidity and other Web3 coding languages to get an insight into what's happening within the smart contracts that they are investing into and trusting with their funds. So let's see, for example, if we have a pausable contract, we can pause it. If we have an upgradable contract, that means we can actually fix some things in the future and continue building on the net. The thing with cryptocurrency smart contracts is smart contracts cannot be changed once you've deployed it onto the network. You cannot change that in any way, shape, or form, but you can change the contracts that it inherits. So that means you can upgrade the contract to continue building upon a project, because a lot of people look at this. There's a slight bit of confusion there because we see all of these projects upgrading and bettering themselves, but then we also hear that smart contracts cannot be changed once they're on the blockchain. So there is a way that you can upgrade smart contracts, and that is something that can sometimes cause problems and cause some security concerns. But that is what this ChatGPT plugin is trying to help users understand in a little bit more detail. Let's continue with today's news though and see what else is going on, because I'm not sure that is something that everybody's interested in. That's just my nerd inside me having a nice time talking about that. Let's see what's going on here. So SEC returns Bitcoin ETF filings by BlackRock, Fidelity, and others. So this happened on Friday. We did see the SEC return some of the filings for spot Bitcoin ETFs. These are assets which are traded on the traditional financial markets, but they are pegged to the price of Bitcoin, spot Bitcoin. So if Bitcoin's worth $30,000, a spot Bitcoin ETF is worth $30,000, and it fluctuates with the price of Bitcoin. We saw that the SEC did return these filings because they had some things that weren't clear. They have since, but BlackRock, I believe, have since reworded and provided more detail in their filing and reapplied to the SEC. I think this was expected, to be honest. I mean, we've seen the SEC decline many different spot Bitcoin ETFs from companies like Grayscale. They've declined 33 spot Bitcoin ETFs so far. Since we've seen BlackRock apply, we've seen 4 other major institutions in the traditional financial space apply for spot Bitcoin ETFs. And this is looking like they know something we don't at this point in time. It's looking highly likely, in my opinion, that BlackRock's ETF will be accepted along with Fidelity's and many other cryptocurrency institutions as well. And when that happens, the SEC don't want to just accept them off the cuff, do they? They're going to ask for more information. They're going to act a little bit difficult. They can't just decline all of these cryptocurrency-based companies and then just accept BlackRock off the cuff. So I think this was something to be expected, not something to be concerned about too much, and something that caused a small blip in the Bitcoin price, but really nothing too much. It didn't cause too much movement. We can see that in this chart here. You can see we were trading at around $31,000. It came down to at the bottom around 29,500, but we're back up trading at those highs again. We will discuss that at the end of today's stream. We will analyze the price of Bitcoin, we will analyze the price of Ethereum, and we'll compare the two there as well. So make sure, if you haven't already, to like, subscribe, hit that bell notification button, and make sure to stay tuned until the very end of today's stream for that update there. We can see here Vitalik Buterin feels bad over the SEC's actions on Solana and other projects. So a lot's been going on with Vitalik this weekend. A lot to discuss here. First of all, in this article, you can see that Solana, Cardano, Polygon, and other projects have been hit by the SEC's lawsuits against Binance and Coinbase. So Binance and Coinbase both had lawsuits filed against them by the SEC a couple of weeks ago now. And within those filings, multiple different cryptocurrency assets were named as securities. Now, the reason they were in this filing was because the SEC were accusing Binance and Coinbase of offering unregistered securities, and then it listed those unregistered securities as tokens like Solana, Cardano, and Polygon. Now, Vitalik Buterin has come out and he says he feels bad about what's happened with these projects, but he supports these projects and he thinks they're good there. So he's seen here, let's take a look at what he's had to say. When asked about his take on the US policy approach to crypto, the Ethereum co-founder empathized with the competing blockchains, saying they do not deserve the SEC's treatment. He said, "The one comment I'll make is that I feel bad that Solana and other projects are getting hit in this way. They don't deserve it, and if Ethereum ends up winning through all other blockchains getting kicked off exchanges, that's not an honorable way to win, and in the long term, probably isn't even a victory. The real competition is not other chains, it's the rapidly expanding centralized world that is imposing itself on us as we speak." Buterin said, adding that he wished all honourable projects a fair outcome in this whole situation. So he doesn't want Ethereum to win because all the competition is wiped out, essentially, by the SEC and its regulation. He wants it to win because he believes it's the best blockchain out there. So you can see here that we've seen Gary Gensler, the chairman of the SEC, say everything other than Bitcoin is a security, but it would not tell it whether the second largest cryptocurrency qualifies. In April, Gensler was grilled by the House Financial Services Committee to clarify the status of Ether. However, the SEC failed to provide concrete answers. And in a recent interview, Ethereum co-founder Joseph Lubin said it is a foregone conclusion. So what's happened here is Ethereum has been classified as both securities and commodities over the years. There's been a bit of a sway between the two. Some people believe it's merged, so we've seen it be a security when it first launched. It was launched by an ICO, which is usually an indicator that a cryptocurrency asset is going to be classified as a security. But then it was believed that it has merged into a commodity now. But anyway, what we're saying here is Vitalik Buterin feel bad for the other chains. Another more interesting comment I would say about what's happening with Vitalik Buterin recently is he said that he only stakes a small portion of his Ethereum on the Ethereum network because he doesn't have it doesn't meet his security standards. Now, if we go over to Twitter here and we go to Charles Hoskinson, who is the creator of Cardano, is this him? Yes, this is the one. He's actually tweeted about this in a little bit more detail. So let's see if we can pull this up. If this is in recent news here. It was in the recent tweets here. Here we go. So Vitalik stakes only a fairly small portion of his ETH because meeting his bar for safety is too complicated. And we can see that Charles Hoskinson, the founder of Cardano, has said, "I had to listen to this a few times. I'm just at a loss for words. All of our ADA is staked. Guess what? That's how it's supposed to be for a properly designed proof of stake protocol." So he's just in shock that the Ethereum founder, Vitalik Buterin, does not have the same beliefs there. Let's listen to this video from Vitalik here. Hopefully you can hear this clearly.
Probably the biggest reason why I personally am not just staking all of my ETH and I'm instead staking a fairly small portion is because if you stake your ETH, it has to be the keys that access it have to be public on some system that's online, and for safety it has to be a multi-sig, and multi-sigs for staking are still fairly difficult to set up, and it gets complicated in a bunch of ways. Probably the biggest reason why
so that has shook a lot of people in cryptocurrency in the last week, because we're hearing that and we're thinking, why are we trusting it when the founder's not even trusting it there? So some issues there, but we'll stay up to date with that and see if he makes any more comments on that. Before we can continue, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. We do these live streams every single weekday. We currently have 19 likes on today's stream. If you wouldn't mind hitting that like button, I would greatly appreciate it. Let's see what's going on next in today's cryptocurrency news here. The Bitcoin ATM firm is going public next week via SPAC merger. Now, I believe this is actually launching today. Here we go, on the 3rd of July today, through a special purpose acquisition company merger with GSR to Meteora. So according to a press release, this is a company that delivers Bitcoin ATMs, and they are launching on the NASDAQ. So very exciting here. So we will keep a close eye on that. It's another cryptocurrency related company. Typically cryptocurrency related companies, like mining companies, have a nice price correlation to the price of Bitcoin. So we will keep a close eye on that. Some of them are very, very volatile. So we will keep a close eye on that. Let's take a look at the next one here and see what else is going on. Somebody just said they had struggle hearing that video, so I'll drop the link to that in the chat if you want to take a look at that at the end of today's stream, but not until we finish today's stream, please. Let's see what else is going on here. Will the EU Data Act kill DeFi? Let's discuss this and see what's happening here. So the European Commission is moving ahead with its new Data Act, which requires smart contracts to have a kill switch. The Commission has reassured Web3 advocates that the Act will not outlaw permissionless blockchain technology. Will this kill DeFi? That is the real question that we are seeing here. So you can go into more detail about the different terms used in this regulation that is causing a concern for the DeFi industry. If you are more interested in that, make sure to go and check out the link that I will drop in today's live chat there on YouTube. If you're following on Twitter, don't forget to come over to YouTube and give us a follow. But the conclusion over here at the bottom of this article is the concerns of some in the crypto industry and advocates of the technology may be unfounded, but the industry is awaiting the publication in the final draft of the Act to see what changes have been made. Clarifying the Act's language remains essential, as some European countries could use it to abolish the crypto industry if they felt their financial sovereignty threatened by the technology. A senior regulatory affairs spokesperson from IOTA was adamant that further discussions are needed before the Act is written into law. Otherwise, there could be unintended consequences for the use of smart contracts and permissionless blockchain technology as a whole. So a lot of thought is going into this. We do need to keep a close eye on this. It could change the cryptocurrency space in Europe, so we need to really be on top of that and see what's going on there. I have put the link to that in the live chat in today's stream, so make sure to check that out at the end of today's video. Also, when you're on the cryptocurrency website, don't forget to go to cryptosavingexpert.com, hit that big blue sign up button at the top, create an account, and if you tick that box there at the bottom, you get access to our newsletter, which launches every single Tuesday at 11 a.m. BST time, and we have a monthly wrap up as well. So you get access to what's happening in crypto, a little debrief from somebody that works full time in crypto. Well, a whole team of people actually put together that newsletter. We've got thousands of people subscribed to that newsletter now, staying up to date with crypto, so make sure not to miss out. Let's see what else is going on here. Bankrupt FTX halts sale of $500 million stake in AI startup Anthropic. So the founder and former CEO, SBF, purchased a stake roughly 6 months before the crypto entity collapsed in November 2022, and now bankrupt FTX has halted the sale. So lots of news about FTX recently. It's come back into mainstream cryptocurrency media here. So what we're seeing is FTX's new CEO is investigating the possibility of relaunching FTX as a cryptocurrency exchange once again. They've got billions of dollars in liquid assets, $7 or $8 billion of liquid assets ready to do something with. And they are now halting the sale of that stake in that AI startup and trying to reverse the problems that SBF did create in the lead up to filing for Chapter 11 bankruptcy in November last year. Let's keep a close eye on that. Let's take a look at the next article here. We're moving on to the prices. So first of all, Litecoin reclaims top 10 ranking after conquering the $100 resistance level. So if we go to cryptosavingexpert.com and we search up Litecoin, let's see what's in here, and we go to coins, you can see that Litecoin is currently trading at $110,000 $1,000. You can see nicely on the chart here, there's been a nice big pump. There's been a huge amount of volume. Litecoin holders will be incredibly happy there. You can see, to be honest, we had a nice level of resistance that has been broken through. So we will keep a close eye on that. Let's continue with cryptosavingexpert.com. If you go to the markets tab here, you get access to all of your favorite cryptocurrencies prices. You can track them all on there. You can favorite some tokens as well. So make sure to check that out if you have not already. Let's continue with this article here. So it's managed to regain that $100 level after breaking through that level of resistance. Litecoin holders are incredibly happy. I will be keeping a close eye on that. Let's take a look at what's happening with Bitcoin and Ethereum as well. So Ethereum has spiked whilst Bitcoin stalls. Ethereum has started to outperform Bitcoin recently. Let's take a look at the price of Bitcoin first of all and see what's going on here. Before we do, please don't forget to like, subscribe and hit that bell notification button so you don't miss the latest cryptocurrency news. First of all, if we move into the daily chart here, you can see we have a zone of resistance between the $30,500 level and the $31,000 level. We've not yet managed to break through that and see a daily candle above that. You can see we had a big wick to the downside over the weekend following that news that we discussed earlier today of the Bitcoin ETFs being rejected by the SEC, but it was just a small blip. They have reapplied and they've provided clarity on the things the SEC wanted to know more about. What we can see here is we have that level of resistance. If we do get heavily rejected from this, I'm looking at around the $28,500 level because that was used as a resistance in the past and a support in the past. Wrong way around there. Resistance, 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 support. But realistically, we are still attacking this zone pretty strongly. If we do manage to break to the upside, I'm looking at the $32,477 level. Also on the topic of Bitcoin, if we take a look at the CME gap for this weekend, on the daily chart here, you can see if we go to the 4-hour chart, that we had a CME gap down here that went from the $30,180 level last weekend to the $30,000 level. That has already been closed. You can see here that this weekend we had a CME gap that was immediately closed there as well. So this is showing the importance of the CME gap. We do see a high in history. If you look at it and you calculate the probability, there's a high probability that a CME gap will close within the first couple of days of it being created. And that's probability talking. That's not me just talking. So let's take a look at Ethereum and see what else is going on in the charts here. So you can see for Ethereum, if we zoom right in, we have this level of resistance at $1,820 to $37. We use that as a level of support and have had a really nice bounce off that. I'm looking as level of resistances. I'm looking at what's been used as a resistance here as well. So I'm looking next at the $1,994 level to the $2,018 level. And then I'm going to be looking at this zone here. So I go from the top of the bodies to the top of the wicks there. To between the $2,120 to $2,140 level. That's what I'm looking at there. So we'll keep a close eye on that. Let's also take a look at the level of Ethereum versus Bitcoin here. Tell me if I'm going too quickly here because I have a tendency of talking very, very fast. ETH BTC here. So if this chart moves to the upside, Ethereum is outperforming Bitcoin, and if this chart moves to the downside, Bitcoin is outperforming Ethereum. Now, I've been speaking about this a lot here on the channel. We're down at these levels, and I was saying I expect Ethereum to start outperforming Bitcoin very, very soon, and it really has, and we've seen a massive bounce there. So Ethereum has started to outperform Bitcoin pretty heavily there. So I'm keeping a very close eye on that, and this is a very useful chart there. I take advantage of this chart very often. So if you are new here and you have not already liked today's video or subscribed or hit that bell notification button, please make sure to do so. If you have tuned in from Twitter, please make sure to go over to YouTube and give us a follow, and make sure to go over to cryptosavingexpert.com as well and press that big blue sign up button. We now have 9,000 users, and you shouldn't want to miss out on everything that's going over there on the website, full of content, full of new ideas, constantly building that website to be the best it can be, and we have so many more new features coming very, very soon, so make sure to check that out. But that's all we have for today's video, so thank you very much for watching. As always, I will be back here tomorrow at 11 a.m. BST time, but until then, goodbye, and I hope you